All right, so today in our first hour lecture, we're going to go over the purchase and payment process in the accounting information system. The payment system is the other side of our last chapter that we talked about, the sales and the collection process. And this we look at on the firm side. When the firm orders some product or service from their vendor, right, or they buy things for their inventory, or so that then the firm goes through this purchase or payment processes, and then we're going to take a look at some of the things to watch out for the payment and the purchase process. The basic structure for this chapter and the last chapter is very similar. And the textbook introduced several entities, and you go through the UML diagram, identify the relationship. So the mechanics of that, the monopoly method that we talk about on Tuesday, and how to recognize keys, primary keys and foreign keys in the UML diagram, or how to recognize if there is many-to-many relationship in the UML diagram. That's not changed. That's the same. So, but the difference is that there are more things to watch out for the payment and purchase process. So if we look at the similar journal entries like we went through on Tuesday, if we take a look at the purchase and payment process, they are usually recorded this way. Over here, you see a purchase debited, okay, with this $1,495.50. And as you can see here, this company pay with the promissory note, the account payable. That's usually what happens with business-to-business transaction. Rarely does a business pay a vendor using wads of cash. It's not like that. It's not like that. You know, when you see you guys ever watch the movie Scarface? Right? He just went into a car dealer shop with a big bag of cash and drop it as he pay him and drive the car away. No, business transaction is not done that way. Usually it's done through agreement to pay and through wire transfer, and that's this account payable here. And usually you will see a note under the account payable, right, specifying some notes, what is paying to. Like, for example, here, purchase inventory on credit from Richardson's and Sons Incorporated, invoice number 1125, dated October 1st, term 210 net 30. Do you guys understand what this 210 net 30 mean? Okay, let me explain to you here. So you can look at the whiteboard. All right. Oh, the whiteboard is behind me. All right, let me move it up a bit. Right, the term 210 and net 30 means that if you pay this vendor within 10 days, you will get a 2% discount, right? And the whole payment is due. The net of the payment, or the whole payment, is due in 30 days. Okay, so as you can see here, with traditional type of accounting ledger, you write these notes as you record the order, right? You want to find out the invoices number, who is this payment or this account payable is paying to, and the terms of these account payable, right? So as you can see here, using this traditional way of accounting, there are a lot of room for potential error, and it's quite difficult to track, right? All this different information. Who are we paying to? What's that invoice number? and when is exactly is the order purchased or the purchase order issued, right? What's the exact term and when the payment is due, right? So the traditional way of accounting, it's okay, but just there are too many information to track. So naturally, from accounting information system perspective, all this information can be recorded, can be entered when a PO, a purchase order, is issued from the company to a particular vendor. So then we can have all these information inside the computer to remind us, right, when to pay, what is the amount to pay, and what is the invoice, right, number here. Okay, so when we eventually pay for it over here, okay, so as you can see here, there's a purchase discount. That means indeed we paid within 10 days. That's why we get purchase discount, and then we use cash payment from the bank, right? Then the account payable is debited. It's now this account payable is gone. Okay, so that's the basics of the purchase and payment accounting. As you can see here, right? The role of accounting information system here is usually to track these various of information, right? But if you think a bit further, right, these are just the typical accounting processes, but there are quite a few different things that would involve in this payment and purchase processes. Okay, and if we were to put in a BPMA model, that's what we'll see. The request price and availability, and place the purchase order, receive the item, and send payment. Okay, so the basic purchase plan is really very simple. But however, understand the power parity, okay, between you and your vendor, right? Or the buyer of your, you as a buyer to a seller of service, that is very important. How do you do business? How do you pay? How much do you pay? How much discount can you ask for? And how much net payment terms that you can negotiate for, right? That comes to play very importantly when you're setting up the accounting information system, or when you work with different vendors, try to make a profit in your business. Right, so if you, let's say, if you are a relatively small buyer, right, that you're trying to sell computer parts or cell phones, if you're a relatively small buyer as a business, right, you can't buy large quantities, wholesale accounts, wholesale quantities. Yet it's very few company or few vendor stores can buy, let's say, 500 iPhone 11 in one go. Right? But imagine that if you are able to buy 500 in one go, you can potentially negotiate a very good term with the seller. Okay, oh, I'm buying so many, give me a good deal, right? Or in other ways, sometimes is you negotiate with the seller, say, okay, you want to push 200 products to me. Now, I don't need 200, right? And I can't sell 200. And I can't pay that much, right? So I want the term to be extended, right? I don't want to pay within 30 days, right? I want to pay in 180 days. Is that possible? Yeah. What do you guys think? Will the seller extend the term to things like this? Oh, extend to all the way out, just pay me in 180 days and 30 days, right? It happens quite often. But let's think about it, why that is. Why a seller would accept a payment term that is much longer than, let's say, 30 days or than usual. Let's think about it. Let me see. Let me find someone. Okay, T, look, you there, right? Yeah, help us out. What do you think? What's the motivation for seller to extend the payment term? Yes. Yes, that's one motivation. They want to maintain a good relationship. They want to retain this particular buyer. But there are other more cynical motivations. Let me see. Gabriella? Yeah. Yes, a lot of times when sellers extended the term of payment has a lot to do with how that seller company report its financials, right? Because you see, when you sell something as a seller, right, as you can see from this here, when we issue the purchase order, right, now when that purchase order is issued and then there's a promissory note, it becomes what we said here, account payable, right? So over there on the other side, the seller can recognize the revenue. Oh, okay, we made this big sales. So a lot of times when you are working with a seller or a particular salesperson, this is one thing very interesting. The salesperson may have motivation to get a very good sales. Oh, record. Oh, see, I made a great sales. I need a bonus for my Christmas, right? Because look at this, I got the 3 million sales. But what happens behind the scene is usually that this $3 million of sales are somehow with very relaxed term, like this, instead of paying 30 days, pay us in 180 days. Or sometimes is that they want the buyer to place a large order, okay, and so they can stuff the channel, okay, with a lot of unsold inventory into the downward the customer's hand. So okay, now let's look at this. I cleared so many inventory, right? I got so many good sales come back, and things like this usually happens when, do you guys know? Towards the end of the year, especially for retail company, right? People want company want to clear their inventory, company want good financial results, and there will be a lot of pressure on salesperson, right, to make sales happen. And how do you make sales happen? Indeed, is through different tricks like this. And usually for this kind of practice, what happened the year after is these relaxed terms, right? It usually have some kind of rider. Okay, if I can't sell this many, I'm going to return to you, right? So the year after, they return these goods back to the seller, and they the company says, I already got my bonus. The salesperson, I already got my bonus. I don't care. There's other people's problem to worry about. So this, in retail industry, there's always this vicious circle, right? Try to boost sales, right? Try to relax payment, relax sales terms, right? And that's one of the common problem when we're dealing with this type of the order, right? And the payment process. Are we placing amount that's too big, right? That we cannot consume, right? Are we able to pay with a set amount of time? Is there any special agreement with the seller when to pay? How powerful we are as a buyer to negotiate the term with the seller, or how powerful we are as a supplier if the buyer is very big. So things like this, it affects the design of the accounting information system, right? So things like we discussed last week, we can inspect, right, the process here that go through with our order and payment system to see whether there are different business rules need to set up inside this process. Maybe we need to add more points or business processes here, not just this simple for, right, to catch things like that. Okay. So like we said earlier, right, strong buyer or strong supplier can often greatly affect the business rule and how AIS are designed, because we may need to design specific the supply chain in order to fulfill a large order, right? Like for example, if you are selling products to Walmart, and Walmart is a very, very large chain company, right? So then you will have to work your production line or work with your vendor to make sure that you can always, right, have the amount to supply Walmart's demand, right? Okay. So when they, one of the things that we're going to talk about today for a large portion of the class is to understand these power balance. So let's take a look at the AIS in purchase systems. We understand that technology serves a very important role in purchasing system. Say things like automatic repurchase, restock, right? So how does that work? Oftentimes, without the computer, without sophisticated accounting information system, the repurchase point or restocking point is usually done manually, and sometimes done in a way that is by just physically looking at your stock. Oh, there's nothing. I better order some stock, right? So I can continue to sell that goods. But if you see this model, the problem is that there will be a gap, right, in your store that you have nothing to sell, or that stock, or you will see a flag that is temporary out of stock, right? Okay. So from accounting perspective, what does a temporary out of stock mean in accounting sense? That's an opportunity cost. You could have earned that sales, but you didn't, right? Because you did not have that stock, right, on the shelf, right? Or you did not move the stock within time from your warehouse, okay, to your shelf or to your stores. So AIS, a smart AIS system, right? Usually what they do is to determine when do we need to make a repurchase, right? Okay, they can put it on a schedule like this. Let me just show you here on the whiteboard. So if let's see the sales of your company on the calendar, okay, over here is sales, over here is your inventory and the order. Let's say if you have 10 cell phone in stock, right? But what you're seeing here is 4 orders, 2 orders, 2 orders, right? And over here, that's today. All right, so we know at this point, we only have 2 remaining in stock, right? Okay, but then what happens that we know is that if we were to order more inventory, it takes time for the inventory to get to our place. That's called the lead time, right? It takes time for us to place that order. So we have to figure out what's the lead time for order in order to decide when do we need to place the order, right? So if the lead time, let's say this is 1 day, 1 day, 1 day, right? So let's say if the lead time is 5 days, right? And look at this cells over here. If we sell even also 2 here, right? If the lead time is 5 days, if we place the order over here, right, we will have 5 days, have nothing to sell because we're waiting for the order to come. So you see, the reasonable time to place that order may be sometime earlier. Oh, we need to place it over here or place the order over here, right? But when do we place that order, right? It is a very, very difficult calculation process because you have to sort of estimate how many items you're going to sell in a period of time, right? And you have to estimate with the lead time in consideration, right? And also you have to consider exactly how many phones you're going to reorder, right? So it's a mathematical issue that require what we call the optimization to optimize the best time to reorder, the best quantity to reorder, right? Okay, and to balance orders out in order to make it make sense. So a lot of more sophisticated AIS system, when it comes to inventory management, they start to do this automatic repurchase and restock function, right? And that has a lot to do with accounting because we have to estimate, right, what the sales is gonna be, right? We have to work it with our budgeting system to give this purchase, right, a go ahead to purchase, right, and to estimate what this, okay, this whole process or whole the accounting process is going to take. So that's what we see here, the calculate optimal stock and research purchasing point. And not only that, we also, the AIS can also perform tests like checking prices and evaluate the vendor, right? How that works is quite interesting. Okay, so let me go back to this chart of my whiteboard here. So as a consumer, you know that you can check prices quite easily, right? There's like a website like, do you guys know Camel, or Price Check or Price Watch or whatnot? You can compare prices, or you can even Google Shopping, right? You are able to compare price among different vendors, right? And in AIS systems, something similar like that also have for business customers, that you can compare prices on different vendors, or you can set up a bidding process. Okay, I'm going to buy 100 t-shirts, or I'm going to buy 1 million pounds of coffee, right? Who's gonna sell it to me, right? Come and bid. So this purchase system may set up a bidding platform, right, for various vendors to come to bid, right? My order. Do you want my order? I'm going to order 1 million pounds of coffee beans, right? Are you able to supply? Okay, if you are, come bid me, bid this. Like in for government purchase, that's usually how it happens, right? We're gonna purchase 10 F-35 fighter jets. Oh, we're gonna start a construction for a military base. Come to bid this order, and then before that, they have to qualify as a qualified vendor, right? And usually things like this: checking prices, place bid, and evaluate the vendor. For business, for-profit business, the checking vendor is quite interesting. When we check particular vendor, what usually happens is that we check the vendor's rating, the credit rating, okay, and also the seller also check the buyer's credit rating as well. And there are several professional credit rating checking services out there that business can use and business can engage to see whether this seller is good, right? Whether this good, they have good credit history. So if the seller does not have a good credit history, right, then it's likely as a buyer that you can negotiate better terms. No, you don't have a good credit history. You really need these sales. So if you're desperate, right, okay, give me a better term for the order. Okay. So also over here, we already discussed earlier a little bit the forecast purchase plan and put it on the schedule. Okay. So we're gonna plan this purchase at this date, this date, this date, and we're gonna schedule it somehow, right? And the scheduling is very important here, because if you are a large retail company, right, the purchase of your inventory greatly affect your cash flow, right? Okay, even though we know that it does not really affect our income statement, because what we purchase is just turn cash into inventory. That's all, right? So on the income statement, nothing's changed. On the balance sheet is that, we move cash into inventory, or we put account payable over there, and then we credit or we debit inventory. right? So on the balance sheet and income statement, nothing's not changed, but it affects our cash flow, right? For retail business, the cash flow to having a working capital is crucially important. Why? Because you see, let's say if you run a bicycle shop, right? You need to purchase inventory, right? In order to sell bicycle. And now you're looking at the company trying to sell you 100 bicycle in one batch because that's a very good deal, right? But you didn't put out the schedule. You just empty out your cash reserve to purchase that inventory. But now the time comes. You have your rent to pay. You have your employee to pay. You have your insurance to pay. Now you are facing what we call a cash crunch, right? And cash crunch is very, very harmful for any retail business. You can see it from news from time to time. They will tell you, oh, JCPenney has a cash crunch. Macy have a cash crunch. That usually means that they don't have enough cash, right, to maintain their operation. So when things like that, when they do not have cash to maintain their operation, they have to immediately go to a bank, right, to ask for a short-term loan, right? And the banks are not stupid, right? If they know that you are in the cash crunch, the term of the loan is not going to be good, right? So you go into this very, very quick downward spiral. You don't have enough working capital. You need to borrow cash. You need the bills to pay, right? So from time to time, it is not unheard of that the company can make a lot of sales, have a lot of asset, right? But because they don't have enough cash, right, they end up going under, or their stock value go below, right, their book value, right, to make them a very enticing purchase target. So what happens is that your company can pay your bill. Good, right? I will swoop in, right, to buy your company, right, a dime on the dollar, right, and I can pay the bill. And not only that, I can cut your company into several pieces and sell it out, right, to make even more money, just to take advantage that the company cannot survive on this short-term crunch. So a lot of people don't see the forecast purchase plan and schedule as something important. Is actually extremely important, because you see, if you don't schedule it, if you don't plan for it, a lot of companies end up buying a large amount at the last minute, right? Instead of putting on the schedule, okay, we can even it out, right? So we will always have a constant supply, right? Okay, so we will not go out of stock, right? And our sales and our cash flow and even our income statement will not look like with the bumps here and there, right? Okay, so that's what a good AIS can do for the purchase as well. And AIS technology can also manage account payables and detect fraud. And fraud happens usually quite often in purchase or payment system. Why? Because now you're talking about buying something and then paying that vendor, right? So a lot of times we have to consider, is that vendor really good, right? Is the thing that we purchased that something that we really needed, right? And usually internal fraud are committed this way. Then the company employee will set up a dummy company, a shell company, or try to benefit their own relatives, friends, right? Somebody pay them, right? So let's say if your company try to buy, let's say, light bulbs, right? Or pens, or like note paper, right? So these are very, very common items, right? But which company gets the order, right? So who gets to decide, right, with whom that we place this order, or how much is a reasonable price, right? So an AIS, right, sometimes have the ability to check whether this vendor is real, whether there's this abnormal relationship between accounting clerk to particular vendors, right, to detect whether there's internal fraud going on. Okay, So since we are in fraud, let's talk about fraud a little bit more. Okay. So in fraud in the payment system, right, in relation to the purchase, that we can take a look at this. That for example, like tracking, evaluating payment to vendors for signs for employee fraud. Earlier we talked about this, but this in payment we'll take a look at the other way around. Okay, so when sometimes payment is issued, right? Okay, we pay $10 for certain things, right? In the old ways or traditional way of accounting, it's very difficult to trace back. What are we paying for? Okay, is this goods indeed in the inventory, right? Or who, right, issued the original PO, right? But with accounting information system in place, like when we go through the relational database, it is fairly easy to see, okay, this actually handled by what salesman person, right? Oh, this is actually handled by a particular inventory clerk. Oh, this is actually belongs to a particular PO that we're working with this vendor. Okay, so as you can see here, a good accounting information system can speed up this tracking or evaluating payment process quite well, and also ensure the goods and services are indeed in there or indeed received, or to automatically trace PO, checking validity and reasonableness of that payment. Okay, and the last thing is the checking invoices against the approved vendor list. This is quite interesting here. The approved vendor list, and this is one of probably the #1 common fraud in accounting department. If you hire a bad accountant, right, this is usually what to watch for, the approved vendor list. What happens with the fraud in the accounting department usually has something to do with the accountant set up fake companies, okay, or use other people's name, right? Like set up a different account, different company, and then issue fake invoices. And a accounting clerk, let's say, if I'm sitting on responsible account payable, I see a check invoice coming in, okay, I pay for it. A check coming in, I pay for it, right? Okay, so good AI is supposed to check, is this vendor real? Okay, is this vendor really doing business, or is this some kind of fishy business going on that this vendor just pop up from nowhere? Things like that happens quite often. You know, sometimes not even with the with bad accounting clerk. And from time to time, have you ever received like in your mailbox something look like a bill, but it's not really a bill? Like checking out, okay, like for example, that sending you see something in the mail said that you are behind on some bill, right? You are, some payment is due, right? Those are fake invoices asking you to pay. And in organizations, in companies, things like that happen very often too, right? The companies or shady companies, they just send invoices. Like for example, pay your domain name, right? Or pay your Google listing. I receive a phone call like that very often, like almost once a week. And a sales call accounting said, oh, your Google listing is expiring, right? Please contact us right away to ensure that the customer can find you on Google. And most of us know it doesn't work that way. The Google's search engine is automatically crawling the website. You don't need to say a place listing on Google in order to get listed or get searched, right? But that's us. We're younger, we know. But a lot of business owners, right, or people who are not that tech savvy, they don't know. And they thought, oh, this is valid. Oh, no, we're behind on some bills, right? So they pay it right away. Okay, so AIS, a good AI is supposed to check something like that too. If you're interested, you can see this article here, over here, that it's on the slides, showing that the account payable fraud is fooling even largest companies. Quite interesting article. They talk about how Google get fooled in account payable fraud, and how Apple, how some big companies, even big companies, are not immune to account payable fraud. Okay. And for me personally, my friend was involved in investigating this fraud. The Starbucks employee and 5 other indicted of 1.5 million bank fraud. This is what happened. That Starbucks employee worked in the HR department. And so in that HR department, he has record to other Starbucks employees' information, right? And he used that to set up some dummy accounts, dummy companies, right? And use that those information to apply for bank loan as if Starbucks is applying for it, right? And then those monies go into those scammers. So my friend is at that time she was working at the Starbucks accounting department. It's very nice. I've known her since I was in Seattle in '96, and she called me out in the blue, said, "Okay, can you help us out? Look into it." And at that time in 2005, and I couldn't. I was too busy, and in the end, she got a raise because she was able to uncover the series of fraud. It's quite interesting. This is the Justice Department even listed this case. All right. So earlier we talked about the power of buyer, right? How it can potentially affect your accounting information system. So let's try to dive into this concept a little bit more. Let's see what does a power of buyer actually mean. So let's think Costco, right? If you, let's say, if you make soaps, you start a little soap company doing like the hand sanitizers, because hand sanitizer business is really good now. Along with the hand sanitizers, the hand wash, all that, people are suddenly very big on sanitizing their hands and whatever. So you have a hand sanitizing product company that Costco engage you and want to sell your product, carry your product in the Costco store, right? So what does that mean for you as a supplier when you have a buyer like Costco? Let's think about it. What does that mean? What does that potentially imply? Ella, help us out. What does that mean? If you engage with the Costco as a seller and the Costco is a buyer of your product, right? What does that potentially mean to you from the accounting perspective? Yes. Think about it. If you're an accountant, right? You're working for this soap company, right? And then the owner is not very happy, come running to you. Yeah, Ella, I just got a call from the Costco buying agent. They said they're gonna carry our product. And you, as an accountant, you're sitting there. What advice can you give the owner of the business? What would you advise the owner? What to watch out for? What does that mean for the business? Think about it. You say, let's buy champagne, let's celebrate, Yeah, this is made our day, I can retire next year, or what else? What would you say? Okay, you want to keep a good, potentially keep a good relationship. But how do you do that? You want to make sure, for example, you are capable of fulfilling Costco's amount of order, right? That's one thing. So you want to make sure your production is up to the caliber of what Costco want, right? That's one thing, right? So if you think from this perspective, what would happen? So Gaurav, help us out a bit. What do you think? If Costco become the buyer of your product, right? You start engaging in Costco. From the accounting perspective, what that potentially imply? Uh-huh. Yes, that's right. But then when you're working with someone that big, right, you don't necessarily have the power, that much power to negotiate. So one thing to accountants to consider is that are we going to get beat up on prices, right? And when you, as a business, you get beat up on prices, and when you go in bed with a big guy like Costco, what will happen is that your company become enslaved to a large corporation. Why? Because you see, as soon as you start doing business with a big guy like that, right? And of course, they a large quantity of order, they want a good prices on their order, so your margin is very small. You start to rely on volume, right? But what happens is if one day Costco say, "Oh no, we don't like you anymore," right? You can't give us like 1 cent more. You can't give it. I just wanted, instead of 10.99, sell us at 10.98. Why you cannot do that? So they constantly beat you up on prices, and because they can threaten you and say, "Oh, if you're not gonna give us a discount, we're leaving you," right? So your company become enslaved to this process. You can't leave the company. You can't leave them. As soon as Costco leave you, now you'll have to find alternative buyer for your product, right? And how many other companies out there can replace Costco, as big as Costco, to consume as much amount of order as Costco, right? Costco, let's say they are able to place 20,000 the bar of soap from your company every month, right? If the Costco don't order that, right, who are you going to sell those bar of soap to, right? So another perspective is this: if you want to, with a relatively small company, you want to fulfill Costco's order amount, right? And what does that mean to your operation? Maybe you need expansion, right? Your factory is not big enough. Oh, well, I need to pay rent for a bigger factory. Oh, I'm not gonna make, instead of 1,000 soap, I have to make 20,000 soap, right? What you do? You have to hire more employees, right? Not only that, what do you have to do? Oh, you have to purchase more equipment, capital investments. But do you have that much cash around to do that? No, so you get a bank loan. So now, see, on the surface, okay, now you engage with the Costco, but now what you're facing with a low margin, large volume, right? You got a bank loan on you. You got more employees depending on you. You have to pay rent. You have to pay insurance. You are responsible for all those different things, right? So now, as a seller, right, you can see this: the power balance may not be in favor of you, right? So sometimes, when a large company come calling, from the accounting perspective, it's like you really have to consider seriously, right? Can our company take care of a customer, a demanding customer like that? If that's the case, what kind of change we have to make on our business rule or how we deal with our own vendors, right? Okay, what change we need to make our productions, right, efficient enough to satisfy customer, right? And so a lot of those things, those improvements come from information system, right? To work out, make our production more efficient, to make our orders more efficient. Okay, so that's one way of looking at it when you have a very strong buyer like Costco. Well, how about this? Toyota. Toyota, as a car manufacturer, is also a very, very strong buyer. Right? If you look at Japan, You know, you guys been to Japan? How many of you been to Japan? See a show of hands. Oh, good. Ish, you went to Japan. So how many of you want to go to Japan? Potentially. Oh, almost a lot of you. Yeah. Yeah, you know, airplane ticket is really cheap now going to Asia. If you want to take the risk. Right. But Japan's now, you know, they very, very few coronavirus cases now. It's almost completely eradicated. You can go. Really cheap. It's like last summer, I go back to Japan every summer. And usually the per person, the airfare is about 1,600 to 2,000 just from here, from San Francisco. It get much cheaper if you fly down to Los Angeles and fly to Japan. But from San Francisco, they just charge you a premium. Everything is more expensive in Bay Area, really. So this year, right now, it's you can get a ticket to Japan as low as like $600. That's like $1,000 off. Really cheap. Yeah, but I can't go. I have summer class to teach and things to do. But yeah, consider it. It's quite nice. So in Japan, Toyota is their headquarters is in the middle of Japan in a city called Nagoya, in the Aichi province. So that entire province, or that Toyota city, yeah, there's a city actually called Toyota City over there, dedicated to them. So that town, all the business there, almost entirely dedicated to serving the Toyota. So they have like okay, that next door they make a little stereo. They make a door handle, and next door they make certain little things. Next door they make light bulb. All these. So Toyota as a buyer, they buy these things from the local manufacturers there. Okay. So a lot of you have heard when you learn cost accounting, you have heard the term the just-in-time manufacturing, right? JIT manufacturing. Have you remember that? Just-in-time, or the other way to call it is called the lean manufacturing. You guys remember that? Lean manufacturing or just-in-time. So what that means is just-in-time is that the company will not keep any inventory, no inventory at all, right? So they want the parts in the production line just in time, okay, for the production need. So they don't need to worry about paying rent for the warehouse, hiring people to move parts around, right? Having shelf space dedicated to the parts, right? So that's what they were doing, just in time manufacturing. So in the late 80s, when the US car companies started looking at Japanese car manufacturer to figure out why Japanese company can be so successful. All right, let me see. Let me mute other people's mic. All right, okay. So they discovered this gem called lean manufacturing just in time. That's how Toyota does it. So from that point down, this 80s, every business book is trying to learn this lean manufacturing just in time, right? But so that's how the just in time manufacturing leaked or seeped into the textbook. But let me tell you the reality of just in time manufacturing. You know, it's a fantasy. Why? If you go to the Toyota City early in the morning, go to the actual Toyota plant, what you will see is lines and lines and lines of trucks. They cannot get in to the Toyota factory. Why? Because Toyota as a company will only allow them to get in to deliver the goods when they are called upon. Okay, you can't even put your parts into Toyota, deliver to the company, leave it there. No, they will only allow you to enter when you are called upon. So as a vendor, as a seller to Toyota, right, you literally gotta have a guy sitting in the truck, waiting outside of Toyota to be called, right? And you can move in. So it's just in time for Toyota, right? But they're consuming social capital, right? For everybody else, you know, because now they are climbing the roads, and people are parking outside, and other companies are just waiting there to get in. So just in time really is a fantasy. It doesn't work like that, because just in time for you, it cannot be just in time for everybody. It doesn't work like that. right? So as a vendor, you have to think, if Toyota wants it tomorrow, it has to be there, right? If Toyota doesn't want it, it has to come back, right? So your accounting information system have to be optimized in a way to work with a buyer, a very demanding buyer like that, right? They won't even let you deliver goods if they don't want it today, right? And so for times when, remember the few, I think 2 years ago, there's a large recall on Toyota product, right? So their sales suffers quite a bit, right? So for that entire time, right, Toyota is not allowing new parts to get in, right? So that dragged down the entire towns, the economy, right? Because all these companies, they have rent to pay, right? They have salaries to pay, right? But they cannot even deliver their goods to Toyota. They're just sitting there, and they have to wait there for the phone to ring. Oh, okay, coming tomorrow, right? So in that situation, right, then you have to modify your business rules, right, to see how should it work in your accounting information system, right? To make sure that even with a buyer like that, that you can schedule, right, the delivery right away. And indeed they did. You know what they did? So they gang up together. So, oh no, we're not going to let Toyota bang us up like this anymore. So what they did is that sophisticated information system, say Toyota is sending out, okay, a list of things that they want tomorrow, right? So what they did is they found an intermediary delivering service, right? So this guy just goes around collecting parts, right? And then wait in front of Toyota there and to go in. So company pay for these intermediary company a fee, right? So this guy just, sometimes it's just a guy riding on a motorcycle, really, because the part is so small and it's so urgent. So they just riding that motorcycle around the town, like those bicycle couriers. Have you guys ever seen? Yeah, similar like. It's very interesting. So if you can indeed get around with it, if you have an accounting information system to accommodate that. So that's what we're discussing here. If you are facing a strong buyer, the strong buyer can dictate terms, okay, can force the supplier to act in order to award a business, or actions can include making substantial capital investment to cut cost, to innovate, and the supplier the strong buyer need a long-term planning, right? For example, that we talked about earlier, if you are supplying to Costco, you need to plan long-term, right? Okay. It's not just, okay, oh, we can have Costco as a buyer, but what if Costco only buy your product for a year? What happens after that year, right? It happens very often. Costco change their product all the time, right? That's what customer want, right? But from the supplier perspective, well, it's like a whirlwind. Suddenly Costco comes and they're gone, right? So it's quite nice, not nice. So let's take a break. Let's come back 2:30, right? We'll talk about more about this. It's quite interesting, and yeah, let's take 10-minute break. Come back 2:30. We'll continue. Mommy. Oh my God. Thank you. Don't talk about it. No. Little me. All right, let's come back to class. All right, is everybody back? Armando, Ray, T. All right, okay, we're back. Joshua, Edward, Ish. All right, good. We're back. So next, let's take a look at the other side. Let's take a look at the buyer side. That's a weak buyer. What are you facing? What do you do? So when we're talking about weak buyer, we can't talk without discussing this person. Does he look like a jerk to you? Does he look like a jerk to you? Kind of, right? Well, what do you think? Ray, do you think that he looks like a jerk? Yeah, kind of, those, shady businessman look, right? And indeed, this person is considered the most hated person in America. You know, how many of you like Wu-Tang Clan? Wu-Tang Clan? Anybody listen to Wu-Tang? You know, Wu-Tang has an album, has a song, has a single, right? And this guy paid $2 million for that single, and he kept it into his own. He never allowed it to release. He just, okay, this song is mine now. And then Wu-Tang is so pissed, you know, this is our work, and then he just buy the right and never released it. That's one of the things he did. You know, but it's not as bad as the main thing. Okay, so there's a drug. Okay, it's called the Daraprim. And this Daraprim is a very important drug, very specialized drug. It allowed the the people infected with HIV, right, and to cure one of the very weird lung-associated infections, and that's this drug is for. And because the drug is very specialized only for people who infect with the HIV, because ordinary people will not get this kind of lung disease. So he bought up this company, and he take a look. Oh, you see, the people who want to buy this drug, you know, they're just individuals. They have no choices. We are the only company making this drug. So he decided overnight to raise this drug's price from $13.50 overnight to how much did you guys get? Take a guess. Raise the price from $13.50 to what? Let's try the number. Let's see. Joshua, give us a price. If you are him, no, more than that. Joshua, give you a number. $750 overnight, raising the drug price from $13.50 to $750. Why? Because the buyer of this drug, they have no other choices, no other avenue to go, right? And the story goes on. It just make me feel sad, and it give you a look of what the business is like. So all of us sitting here and think, oh, this is awful, right? But guess what happened? That company's stock went through the roof. The investors are so happy with him, right? They keep letting him do this, right? And he just go out and say, yeah, this of course. I mean, this guy has a Columbia degree, and he just, you know, very shrewd businessman. So even though when we hear this story, we think, oh my God, this is awful. And he has that attitude too, you know. $13 to $750, but investors loved it. Because why? Because those buyers of the drugs, they are weak. They have no other place to go. They have no replacement. So this guy's name, let me write it down. You know, so you got one of the person that you know you can hate, right? Comfortably. Okay. His name is I don't know how to pronounce his last name. It's quite weird. K-R-E-L-I. Shkreli? I don't know. Okay. But he's considered the most hated person in the United States because of what he did. And this drug, this Daraprim drug, is not the only one. He did other drugs as well, and similar type of approach. Now he's in jail, right? And not for this business, it's for other. He like defrauded his investor and whatnot. It's just bad. The reason why we're talking with this is that I want you to focus weak buyer's dilemma. As a business, sometimes you look, if you are facing with a strong buyer, right? Okay, you face with the same dilemma as well. You have no other avenue. You are relying, okay, on that only supplier or main supplier because that supplier has so much power over you, Okay. So it's usually what we call the weak buyer dilemma is that the buyer is at the mercy of the seller in terms of quality and price, make the industry less competitive and increases profit potential for the seller. This happens a lot in electronic business. Like for example, like Intel for the longest time, right, has dominated the chip making industry. Right? So what happens as a buyer, you are at Intel's mercy in terms of the quality and in terms of the price. Okay, so when they come out with a new product, new chip, they can set the price very, very high because they know, okay, the buyer has no other avenue to go. Right. So if you're a buyer, right, as a business, right, sometimes you have to walk around with a system like this, right? Okay, right. And one of the example is this. How do you do that as a weak buyer? Do you guys know this International Brotherhood of Teamsters? You guys know this organization? This is the single largest union in the United States, truck drivers, right? Have you heard the name Jimmy Hoffa? Okay. It's a legendary figure in America history. He organized the biggest union in the United States of truck drivers. What happens with the truck driving industry is because every truck driver, right, is considered an individual business back then, an individual contractor, right? So what happens is that large companies, when there are like shipments, okay, they can beat up on the prices for these individual truck drivers. So they can set really unreasonable terms. I want these set of goods to be in New York by tomorrow, right? So truck drivers are forced to work on a very, very unsafe environment and very competitive because they want a good price. And not only that, a lot of times they have to drive, right, overnight, right, cannot sleep. They take pills, right, to stay awake in order to stay on the road, right? So Jimmy Hoffa started this International Brotherhood of Teamsters to team up all the truck drivers together. No, as a truck driver union now, we can set the price, right? Okay, that's the union rate. Right? We try to protect all the truck drivers. And on the other hand, truck drivers, when it used to be when it comes to buying insurance, right? Okay, or buying parts for their trucks, right? Or buying different services, they are very, very weak because they are considered you're just a single buyer. But as a union, a unionized environment, then they can go ahead and work a good rate for the insurance, right? Like me, I'm considered a state worker, a public servant, right? Because I teach in the state university, right? So in California, the California Employee Union is considered the biggest one. So when insurance company, health insurance company, try to get the Cal State to buy their insurance, right, we can set a really good price, right, compared to individual just to try to buy health insurance, right? When the individual try to buy health insurance, they can set, a prior condition, or you can set all these various terms, right, the restrictions. But then if an insurance company try to sell to a strong buyer, then the power shift, right? We can get a lot better prices. Like for me, take a guess, I have 3 kids, my wife, so 5 of us, right? And I'm insured, health insurance, I go with the Kaiser, right? And every time we go to the hospital, it doesn't really matter whether it's a surgery, whether it's x-ray, whether it's like a CT scan, and all I need to pay is $15. That's it. So guess how much I pay per month? You want to take a guess? Let me see. Let me get someone. David Chan, you want to take a guess how much that insurance is per month? I paid $97. That's it. $97. Of course, the school pays a portion of that, a large portion of it, but a lot of it has come to the state power as a large entity. A strong buyer can negotiate the term. You will never get that if you just go to Kaiser Permanente website. Oh yeah, somebody told me he only paid $97 a month for his entire household of 5. Yeah, give me that price. Forget it. You're not gonna get that, right? Okay, same thing here. Okay, so back in the day when you, as a buyer, as a weak buyer, when you go ahead and buy wireless, it used to be very restrictive. They have very strict contract terms, right? And you can't change numbers when you switch the carrier, right? And back in the days that the device is locked to the particular carrier, right? So if you try to switch your wireless carrier, it's so much headache, right? Your number is gonna change. You cannot use your phone anymore, right? And all these. So as an individual weak buyer, there's really little recourse that we can do. So what happens is that the weak buyer can seek potential protections from government, union, or collective actions. So what happens is that, okay, then the people start writing to their senators and congressmen and say this cannot be. So the restrictions for wireless carrier plans has greatly relaxed. Now your number is portable from one company to another company very easily. The phone, they cannot lock the phone anymore if it's paid for, right? And then, or it become the you don't feel like you're locked to their service anymore. So that's what happened when the weak buyer can do. So the supplier power, when it comes to, we discussed the supplier and buyer power parity, is that the pressure from supplier can exert business by raising prices, lowering the quality, or reducing the availability of the product. Like earlier we talked about how strong the wireless carrier they can be, right? Okay, so this happens usually the switching cost of the buyer are very high. It's high for the buyer to switch to one supplier to the next supplier, or threat or forward integration is high. For example, if you buy as a business, you buy a very important part, right, for your business, like let's say an engine, right, for your electric car, and the forward integration means that you have to, for this, you got to have other parts that will work with this particular engine, right? So the integration, the forward integration, if you were to change this engine, then everything else has to change, right? So at that point, you are less likely to change the supplier, or a small number of supplier relative to buyer, or low dependence of a supplier sales on particular buyer, or switching costs of the suppliers are low. These are all conditions that may change the buyer-seller power parity. So the purpose of this chapter is this, that when we examine the business rules, right, even though that we see that the purchase and payment accounting, the cycles are very, very simple, but a lot of complication comes into play when you have to consider the buyer-seller power parity, because it will change greatly when how this business rule was set. Because this business rule, a lot of that depending on how powerful are you in the power parity against the buyer or against the seller, then it will affect how your business are done. Okay, so the a lot of times that I want to say this to my students is that I don't like to teach just to the textbook and just the very basic. I want you to engage to think like an accountant. I said it in another class and I'll say it here again. The value of an accountant is determined by the quality of your advice. That's how you determine a good accountant to a bad accountant. right? That's how you determine a value of an accountant. How good is your advice, right? That requires you to understand, things not just on the surface, right? If we were just talking about the surface issue of the purchase and payment, then you won't be able to think deeper to consider the potential fraud issues or consider the seller power parity issues, right? So that's the important part you have to think, right? Above and beyond just what the basic, the very, very common issues that the textbook talk about. Okay, so these same thing you see here, right? Okay, remember to practice them, right? Because this is going to be on the exam. I'm going to ask you to explain the relationship. You want to try that with me? Let's try it. Let me find my stick. Oh, you can't see it, can you? Let me see. Let's give it an exploded view. Oh no. Oh, okay, here. Right. So let's try with me. Let's try relationship number 1 between purchase order and the product over here, right? So we see 2 stars. What does that mean? What kind of relationship is it? Many to many relationship, right? Okay, so if we are standing on purchase order, looking at product, how do we make that sentence? For every product, right, there can be on 0 to many purchase orders. So what does that mean, right? A product, right, okay, can be on 0, right? This product number 1, iPhone, is not on this order, is not on any order, right? 0 purchase order, right? That means this product hasn't been sold yet, of course, or can be on many purchase order. This product can be on purchase order 1, purchase order 3, purchase order 11, right? Okay, and the other way around, when we're standing on product, looking at purchase order, right? For every purchase order, there's 1 or many product on it, right? Does that make sense? Yeah, it will not be 0, right? Right, because a purchase order will not be issued if there's nothing to buy, right? Oh, here's a PO, and what do you want? Nothing. No, it will not happen. Right? Okay. So why is this many to many? It's because we need to determine when we look at the product, right? Which PO are you on? Or if we look at the PO, or what product do you have? Right? We don't know. Right? So if you want to identify the individual product on the individual PO, right, you need a specific identification, and that cannot happen when you have a many-to-many relationship. So that's why we need the association table, a composite entity between these two, so we can know, okay, purchase 111, right? Purchase order 111, there's A is for iPhone, 111B is for a particular product, right? So with this composite entity, we can make something like that, right? So let's take a look at number 3 here. Number 2 is easy. It's just similar to number 1. Number 3, between cash disbursement and cash. Right, so over here, cash disbursement. If I'm standing on cash disbursement, looking at cash account, this cash means cash account. What sentence do I make? For every cash account, it can be 0 or many cash disbursement. So what does that mean? Right, like I personally have this experience when I was much younger. I have many bank accounts, right? But some bank accounts never get any deposit, right? That's actually what it means. Yeah, many bank accounts. You guys know the song? I got the bank account. I got the bank account. Yeah, so what? You don't have cash in the bank account. Doesn't mean anything. Right. So the other way around, if we're standing on cash, looking at cash disbursement, How do you make that sentence? For every cash disbursement is one and only one cash account. What does that mean? So you got a cash disbursement. That means you're paying something, right? Okay, it counts from one and only one account. It's not like you're paying for a order or you're taking from two accounts. No, just one account. Okay, your business is not that bad that it's like, oh, like I got money from Bank of America and I got $5 from Chase and I got 11 from Wells Fargo and finally I can pay for it. No. One and one account only. You are not splitting the payment into different bank accounts. So that's one and only one, right? But can it be one and star? It can be if your business rule allow you to pay for a particular payment from multiple accounts to combine them into one payment. Oh, I'm gonna split this payment. You were gonna get a check from Chase and get a check from Bank of America and all that. It is possible. Okay. Right. Or how about is it possible that 0 to 1? No, right? No. Yeah. Okay. When a cash disbursement happened, it must come from some account. Okay. So that's how we interpret that. All right. So that's this chapter. Okay. And so we're gonna go for the next chapter on the next unit on use case and use case analysis. Let's just take a short break, come back at 3, and we will work on the AIS. It's already been an hour. American Mensa. What the heck is this? Mensa wants money from me. American Mensa. Like 100% win rate for Mensa. I'm a Mensa member. What? Means I'm super smart. What member are you? I'm a privatizing member. I'm a Costco member. All right, let's come back to class. Move on to the next AIS unit. All right, so in this unit, we're going to talk about users of your AIS system to understand what users are. And the task for today's unit is we're going to build the use case analysis to see how your AIS can be used. Okay. So first, let's try to understand who or are the users. What are the users? By definition, user is a subject who interact, okay, with a system, typically through an interface. Like, for example, I'm a computer user. I interact with my computer through a keyboard, right, and a mouse, right? And I can also interact with my computer through a clicker, and I have a huge writing pad like this that I can write on. So these are the interface that I use to interact with my system, okay? But however, a user is typically a person, but could also be a computer process, a program that interact with the system, okay? It's not just a user. It governs the subject-object relationship. So when a subject tries to interact with the system, it can be considered as a user. Like, for example, when I execute a print command from this computer, right? So this computer registers me as a user, but from the printer's perspective, they are getting the print command from this computer. In that sense, that computer becomes a user to access the printer. Okay, that's a more broad definition of a user. Okay, so when we talk about users, we cannot forget to discuss the user privilege. A user have different privilege set that they can perform. Like for me, as users to our iLearn system, I definitely have a different privilege than you as a student. For me, as an instructor, my privilege on the iLearn system, I can assign assignments, I can give grades, right? I can view every other student's grades. But for you as a student, you probably should not have the privilege to assign your own grade, right? But you probably would want that. You know, okay. A part of your iLearn test is to give your own self a grade. Oh, that's would be quite nice. Yeah. No, so we understand. Okay, the users should have a different user privilege. So there are generic categories of user. If we categorize them by the user privilege, these are the end users. Okay, usually the customers, employees, right? They consider at the end point of a system. So that's what they are called an end user, right? They're also super users. Okay, let me manage the mic. Okay, mute all. Okay, so they're also super users. Super users, they have what we call an elevated privilege, can perform functions that the end users cannot, can override actions performed by the end users. For example, every one of you, most of you have shopped in Costco, right? We've been talking about Costco quite a bit, right? So have you shopped in Costco? Can you see show of hands? Yeah, good. So whenever you go shop in Costco and you are at the cash register, so if you discover something that you don't want, right, that you try to take it away from that the register, trying to find that the conveyor belt. So if the item is already scanned, right, what happened? Right, the cash register, the person, right, they cannot just simply take it off, can they? No, they will call a manager, right? And the manager will come to insert the key and type in the password in order to take a particular item off, right? The receipt that is already being scanned, or an item that is already being scanned, right? So that's what we call a super user, an elevated privilege, so they can perform additional tasks, right? Okay, that's the reason why that is for fraud prevention, right? So the issue is that if a employee can take something off the conveyor belt or try to remove it from this already scanned receipt, and then they may not be controlled to see what is actually went through the cash register. People may walk out of the store with the items that's not on the receipt. So they have that one control there. So you need an elevated, a super user to perform that. There's also guest user. Guest user assume no privilege or identity in the system. So most of us use the cell phone or go on website. Like for example, you have like Instagram account, Facebook account, various account to various websites. So before you sign up or log in, right? Okay, you can still browse the site to a limited degree, right? Like that's what we call a guest user, a guest to the system with no set privilege or no identity. You are just anonymous, right? Just browsing the system. Okay, that's what we call the guest user. And also there's something called the restricted user. Restricted user, that is a very interesting definition, is that their privilege is restricted in some sense. For example, if you are working in the accounting department, right, and the sales department manager want to access the accounting data from last year in order to determine the sales promotion price they should set, right? But then the sales manager come here, the accounting record is so big, right? You cannot let the sales manager to see all the accounting data. That's not allowed. So in that sense, you can only allow the sales manager to see a limited set of data only last year or a limited time, right? Only this week, right? So we are restricting that user's access in some terms, right? That's what we call a restricted user. Their access to the system is restricted in some sense, like such as period of time or length or scope of the data, things like that. And then there is administrator. The administrator's job is to administer and manage various user privileges. Okay, so when it comes to user groups that will interact with the system, first we consider the human subject. I think, who's gonna use your AIS? Who? The accountants, right? Yeah, the accountant's gonna use the AIS, or perhaps the customer gonna use the AIS to track orders, or perhaps the manager is gonna use the AIS, right? So we think there are certain human subjects, the management, the accountants, the customers, perhaps other employees, or external auditors, right? Gonna use your AIS to extract data, right? To conduct audit, right? Or maybe the project development team themselves, right, need to access the data in order to make an AIS system, to upgrade the system, so they may need access to the AIS system. Okay, there are system analysts and the programmer may need access as well. How about non-human subjects? What kind of non-human subjects may interact with AIS? There have been quite a few. For example, the Google AdSense or Google Analytics, or Salesforce may interact with your AIS directly. So your accounting information system are able to purchase ads, right, to determine what a particular product, how many times it's being searched, right, or to buy some ads using Salesforce to analyze like what's the social media reactions to a particular products are, right? So that's, in that sense, when the Google AdSense platform or Google Analytics platform try to interact with AIS, that's a non-human subject. Also, IoT devices, Internet of Things devices, like Apple Watch, right? NannyCam, right? Those things, Internet devices, right, may also interact with your system. Right? Like, for example, last semester, one group of the group, they did a project. They installed the Internet of Things device in a water tower. So what that does is when the water tower's water drop to a certain level, it will send a notification to our AIS. So our AIS will know, okay, this water tower is going to run out of water very soon. So we can schedule a delivery to that company, right? So that's one sense. In that respect, that IoT device, Internet of Things device, is considered a user, right? How about robotic devices, scanners, right? Okay, like for example, if you have one of the student group did is they have a Roomba-like device to deliver food to the customer within the store instead of using waitresses, right? Just the robot will roll out and take the food, take the payment, whatnot. So in that sense, that robotic device or the scanner that you use, like in the POS, that that nowadays, like most of the stores, like Walmart even, right, you have a self-checkout. Okay, so in that sense, that scanner device can consider as a user as well. That user scan in, interact with the system to input information into your AIS. So that's also considered a user. So when you're doing your group work, okay, I want you to think of this, some of the human and non-human users that would interact with your AIS, and think very quickly, what do they do with your AIS? Okay, that's a very good starting point when we start analyzing users in your AIS. Who are they? Who need access? What do they do in your AIS? Right? Okay, that's your starting point. Next, we'll consider the user's status in the system. The user's status in the system is quite important. If we look at by their status, first, we see the status whether they are an authenticated user. Okay, the authenticated users go through what we call the authentication process. And this authentication process gives the user the right to access the system, right? So when you say the word, okay, oh, this is authenticate. This is authentic, the authentic experience, right? Okay. Oh, and I make sure it's real, right? Authentic. I always like that sales pitch, the authentic, Baja experience, the authentic whatever experience. That means that something is real. So when you think authentication users or authentication process, that's indeed what it implies. That you are real, you are really who you are, right? So how do we authenticate indeed who you are? So when you approach a ATM machine, right? Okay, how do the machine make sure that you are indeed who you are? How? Your PIN, and not on top of the PIN is you gotta have that card, right? You can't use somebody else's card and put your PIN, it won't work. So the way a ATM machine to authenticate who you are is by using what you have, the card, and what you know, the PIN number, right? Okay, that's what we call the multi-factor authentication. You use 2 factors or more factors to authenticate who you are, right? So whenever a multi-factor authentication drops down to a single-factor authentication, the security greatly reduced. So for example, the chip card. You guys know this chip card? Nowadays you can just beep, right? Tab and charge, right? Okay. So in that sense, it does not require a password. It only requires the possession of the card, right? That's the only way to authenticate, okay, whether you are indeed who you are, right? The owner of the card, right? So that becomes very dangerous because whoever has that card, right, can just go ahead and tap, right? And that brings up something that you have to be very careful about, right? In the old days, when we deal with credit cards and whatnot, right? What happens when I don't want this card anymore? You cut it up, right? Right? But nowadays, what happens with the chip card is that the people do not realize when they cut the card in half, the chip's still there. You have to cut the chip in half, right? Or otherwise, the hacker is still able to access the card somehow to retrieve information from that chip. So make sure next time when you cut up a card, you cut out the chip as well. Okay, that's very important, right? And nowadays, those fancy cards, right? They even hide the chip. It won't let you see where the chip is, right? Then so you don't even know that there's a chip inside the card. So what do? You can shred the card if you want. There's some good shredder. You can shred the card, right? Or you can burn it, right? Other ways. Okay, so when we look at authentication, the other side is what we call, it's called the authorized user. The authorized user is very different from an authenticated user. Authorized user provides the user the level of access. Are you authorized to do that? Yes, you are you. Yeah. I mean, say, oh yes, suiting, you log on to the system, you are indeed suiting. Yeah. I learned you are you. But maybe you are not authorized to do certain things because you don't have that level of access, right? So the authenticated user and the authorized user, they mean different things. And it's very important to separate them. Do not confuse the definition of the authenticated user and authorized user, okay? And the guest user or unauthenticated user we discussed earlier that assume no rights and only with a very basic level of access. And next one is what we call the unauthorized user, okay? Unauthorized user is the user that are in certain area of the system beyond their authorized access. A lot of times when people talk about unauthorized user, they immediately think about hacker. No, that's not the case. The majority of unauthorized user, they are coming from within your company. They wander around into systems that they are not supposed to be there. They breach their access level to access data they are not supposed to see. So that's what we call an unauthorized user. You are you. Yes, you work for Starbucks, right? But you are not authorized to see this, okay? And that point on, so let's say I'm a Starbucks employee. I work for HR department, right? So I can see everybody's data. So I guessed some people use their birthday as PIN number. So I try to use that, right, to get to area that I'm not supposed to be in. At that point, I am considered as an unauthorized user. Okay, so we see that the authenticated user and authorized user, they are actually not the same. You can be an authenticated user, right? Yet you are unauthorized. It's possible. Okay, so authentication and authorization, they are separate. Okay, so once users are authenticated, the system will then know who that person is. Oh, okay, you are John, you are Mary, okay, you are Bill, things like that. So the who is associated with their right and their permission of the system. Okay, so once the authentication determines the right of access, the authorization establishes the actions the user are authorized to perform. Okay, so at this point, when you combine authorization and authentication together, then you will know who can do what, right? So you can't have just one, you need two, right? Authentication determines who you are. Authorizations determines what can you do, right? So put two and two together, we establish who can do what. Okay, an important thing about authentication authorization is that the authorization level can change, okay, based on your user role, your temporary status, your participating in some projects. So you may be temporarily elevated to have more authorization or less authorization, or your authorization can be suspended, right, in some sense. But then the problem with authentication is authentication seldom change. Why? Because the authentication is based on you presenting the information to prove that who you are. So problem is that your birthday don't change. It's not supposed to change. And your social security number, right, is not supposed to change. So those profile once set up, you use your social security number, your birthday, or your biometric data to set up your user profile. That user profile is not supposed to change, right? So that is why there's so much problem with the Equifax hack. So how many of you got a letter from Equifax saying that your data may be breached? Right? Remember the Equifax hack? 240 million data. That's almost the entire population of American adults, right? The information are hacked. There's a big problem because the information content in there doesn't change. The bank that you bank with, it doesn't change. Your birthday, the place that you live doesn't change, right? So what happens is that that authentication profile, that hacker can use those information later, right? I can use that information because I know who you are, I know when you were born, I know what bank you bank with. I can use that information as a hacker, right, to hack your information down the road. I don't need to do it now, right? So even though there's no immediate value, immediate damage, right, to Equifax hack, right? But you may suffer the damage down the road because authentication seldom change. As the identity of the person does not change unless very rare instances such as identity theft or domestic abuse, right? So for you, you're still young, then it is still possible that you may find some really abusive girlfriend, abusive boyfriend, and they click you all the time or whatnot, right? And this recourse, you can change your identity, if you are a victim of domestic abuse, right? It's a very good thing, Okay. It's fun. It's quite interesting, right? So next, we take a look at the concept of a class or group of user. When we talk about class of group of users, you think, right? Okay, there are individual users like the CEO, an individual employee, right? But when it comes to AIS, what we're dealing with is not just individual, we're dealing with a group, right? The accountants do certain type of things. The management do certain type of things, right? So we group them together in the user group, user class or user group because they share similar needs, they perform similar functions, they have similar privilege in the AIS. Okay, like for example, customers, employees, accounting clerk, managers, they are all common user classes. There also can be subclasses of a user. For example, right now you are a customer of say Amazon, right? That's a user group, but under that user group, there's a subgroup for ordinary Amazon users, the Prime users, right? It's a subclass, right? They share some privileges. They inherit some privileges, right? But they may have more. They may have something different. How many of Prime users here? Prime? It's like what? $60 for students? Is that right? $60? You guys think worth it? $60? I think so. No, especially now, Yeah, you can get it now. You're locked at home getting things from Amazon, right? Okay, like my family, like we live and breathe Prime. The kids put things, in the shopping cart. Just try to see that. Have you guys ever done that? Put things in the shopping cart just in case your mom and dad just actually click buy. That's what my kids do. Just put things in the shopping cart, right? And then we just use the Prime to return it and just drop it off in the UPS. It's quite nice, right? So subclass can inherit privilege from the parent class, but the class do not overlap in principle, right? The class, what it thinks, they don't overlap each other. Okay, so different user class. Okay, when you try to determine the user class, you understand that they have different needs from the system. They may have different level of access privilege. They may perform different set of action, and they may have different permission level based on the user classes. Okay, so we're getting closer and closer to talk about the user class in your AIS system. So the AIS system users must be able to first identify, okay, establish the identity of the users, determine what class the user belongs to through authorizations, and allow users to add new input, update, or perform some calculations, or remove the existing data. So that's what the AIS mainly do, okay, with the users, right? Okay, so it governs all. As a manager, our manager need to check the order status. Our manager need to issue approval for a large order. Oh, for user accounting clerk, need to check some different things. So that's what the users usually do with AIS. Okay, so what you need to think is here, this sentence here, the AIS, right, would enable different users to do their jobs. That's the principle in thinking, right? What is the user class? What the users do, right? We enable them to do their job, right? Okay. So this some of the classes, user classes for your AIS users. That's the second step. Okay. What are the user class? Group them together. Okay. When you're listing users, you may say, "Oh, CEO is a user," right? Okay. Who and who so and so is a user. So the next step is to group them together. Find out the class of users, whether you need to subclasses or whatnot, right? Okay. So then, now we have finished talking about users. Just think about use cases. The use cases, the easiest way to approach this is by thinking, okay, if you're building a house, if you have a house, right? To accommodate different users of the house, there will be different rooms. So yeah, master bedrooms are for mom and dad, right? Like the daughter's room is for the daughter, right? The girl's room and the boy's room. Right? So some rooms are meant for everyone, even for guests, right? Okay, some rooms have special utility functions for a special user, like the laundry room does laundries. Mom uses, right? Or kitchen is for cooking, right? Okay, you want to restrict the access want the kids to the kitchen, but maybe they get hurt. Right? How many of you cook? Any of you cook? Really? Oh, Joshua, you cook? Oh, nice. I cook. Yeah, yeah. That's how I get married with my wife, because I cook. You know, so it's like. But my wife is very smart when it comes to cooking. You know, she can cook very well, but sometimes she screws it up intentionally. That's the trick to learn, you know, right? So that's the biggest error that I made, is that showing my wife I can cook. You know, why? Because now you're tied to the job, right? So next time, if you're with your girlfriend, your boyfriend, right? If you have to cook, screw it up, right? Intentionally screw it up, so you don't need to cook. Because if you can do it, you're tied to the job forever. Hey, you can cook. Why don't you just cook? Right? No. Nah. And so it's like, yeah, 2 spoons of salt, 4 spoons fine. Just screw it up intentionally, so you don't need to cook in the future. Okay, so some rooms are restricted to certain users that you can't get in. Like for me, I can't even get to my daughter's room. She's gonna just get out. So they won't let me in there. So think about this, you know, like this. A lot of guys here dream of things like a man cave. You know, you have like pool tables, bar, you know, nice chair, and then the media room, very nice. So man cave is supposed to be the guy. So the AIS is kind of like that, right? Imagine your AIS if you have to design different rooms for serve different functions, for different users, for do different things. Okay, that's what the use cases is about. How is a particular room used, right? What do you do in those rooms? Okay, so think. If you have an Apple Watch, okay, how do you use Apple Watch? How many of you have Apple Watch? Apple Watch? None? Nobody? Let me see. Next. Really? Nobody have Apple Watch over here? Why not? Okay, why don't you have an Apple Watch? Let me ask. Brian, why don't you have an Apple Watch? and then you don't use watch. You don't have a, okay. So in this case, what we said is Brian has no use cases for it. You see? That Apple Watch serves no use cases for him. So you see, when you design a system, a device, that's indeed what you have to do. What are the use cases for this? What are the use cases for the system to justify that this thing is useful, right? Because if you don't have no use cases for Apple Watch, I don't need to tell time. No, I'll check my email on my phone, right? Okay, I don't want to make calls on my Apple Watch like, hey, call me. No, I don't do that, right? I don't need to listen to music. I don't need to track health status. So some person may have no use cases for a system, right? And the designer's job is to justify those use cases, find those use cases, so your creation, your system are useful to the users, right? So like, for example, one of my earlier class, a student, she said that she found the Apple Watch so useful, and she was telling this story to the entire class, said that she was preparing the final exam and she was really nervous, and Apple Watch sent her an alert. Are you okay? You know, do you need some you need to slow down or whatnot, because the Apple Watch detected the elevated heart rate or whatnot, and so sent her a health alert. So not only that, she told me that if you fall down accidentally, right, Apple Watch is gonna know and they're gonna ask you, do you want me to call the ambulance, right? So they have use cases like that, you know. Okay, so it may be useful for the elderly, right? Okay, so that's what we're talking about, the use cases. As you can see here, all the use cases that I highlighted, right? What's the word that I highlight? The verbs. Okay, that means the action that you take, okay, with the system. What do you do, right? So when we talk about the AIS and the use cases, different users or different user cases interact with the AIS differently. Thus, a use case is established. What do you use it for? How will the users use the AIS to do their job? Or we think, how will a process use the AIS to accomplish certain tasks? So those are what we call use cases. So each type of users, you would have different use cases for the AIS. What you need to do is consider their role and their functions. What do the user use the AIS for? And what do they do with the AIS? Okay, so how you're building it is quite easy. Okay, and a use case is commonly described by a verb to illustrate the action performed. Okay, so use cases are essentially in establishing what we call the perceived usability. Remember what we talk about? What makes a good AIS, right? If you have no use cases, then people will not think it's even useful. Well, then it's useless. Like Brian and Apple Watch. Nah, it's too expensive. I don't find it useful, right? They have no perceived usability of that. Right. So if your AIS has no good use cases, then it's just out of the door. It will not be considered useful to begin with, right? So use cases are usually collected through user interviews. When we build an AI system, we may interview the accounting clerk. Hey, what do you want in a system? What do you need to do? Right? We interact with the vendors. Hey, do you want tracking? Where? Do you want this? Do you want that? So they are usually collected through user interviews, and the use cases are then documented. Oh, somebody wants to do this, somebody wants to do that. And later, those user cases can be used for conduct what we call the usability study, right? Like Apple said, oh, we can track heart rate, we can track health status, right? Then the usability study can be conducted, see how user find it. Is it user friendly, right? Is it useful to you? How often do you use it? Things like that, right? Okay, so it is important in establishing what requirements should be met and what features should be included, because these are all from the use cases. So the important thing for you now is, what do you have to do to build the use case analysis, or what do I really want? How do you need to be included in your report? Is this. Just give me a graphical representation of users, who they are, or the user classes, and then what they do in the AIS. That's all I want. A graphical interpretation, okay, of the different use cases for your use AIS. And that's what we call the use case diagram. For this real estate firm, you can see that the project manager manages client, manages project. Okay, there's Google Wave here, Salesforce here, the open project here. You can see all that. Show properties, report status, market properties, logs activities. You see that? It's all actions, a verb. That's what you're building here, right? Just give me a use case diagram, how people, right, interact with your AIS. So if your AIS gets too complicated, you can have a subsystem approach. Okay, you have order management here, customer account management, invoicing control, product and pricing administration, the subsystems and different use cases for the subsystem, but it's not required. Show me something like this is fine, right? Okay, so I want you to be specific, compose the use cases with the action in mind, right? Okay, so basic requirements in your project, it must be accounting users present because you're building AIS. So I want to see what accountants do in your AIS. Okay, so don't use generic actions such as enter data, right? This is very confusing, you know. So what do people do with the AIS? Enter data, of course. Enter data, enter data. You see, if I see some use case like, oh, project manager enter data, salesperson enter data, the buyer enter data, no, that's not use cases. Okay, that's that's cheating. No, doesn't help at all. Don't do that. Okay, and also remember the scope of your AIS. Now, what happens when students building use cases? They tend to go too far out of their planned AIS. Remember, you are not doing a use case for your business. You're not. Okay, you're not thinking about how people use my business. You're only thinking about how people use the accounting information system. That's all I want. You don't need to go overboard, right? To think about, oh, okay. Right. And then for this, what is required is to prepare the use case diagram. Must include the accounting user group. Some guidelines here. Okay, users are presented as user classes or user group, not individual users. If the system becomes too big, you can break into subsystems. Okay, not only the graphic presentation, sometimes you can list the user in list format, because graphically, sometimes the arrow goes everywhere, right? It's hard to track. So you may list, okay, project manager, a bullet point, they do this, 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 this. You can do that as well, right? But it's not required, right? It's nice to have, make it even more clear, right? For the list format, it is acceptable to present the use cases by the user class. Just this user class, these are use cases. This user class, these are user cases. So hand-drawn diagram is not allowed. Don't hand-draw it, right? Use some kind of computer drawing program, right? If you are familiar with the VCO, VCO is very easy to use when it comes to drawing this type of things. Okay, and okay, the tips. Think what actions need to be performed to make your AIS functions, and what do they need to do, need from the system to do their job. Okay, so some things, tip lines like this. What are they do in the system, or what are they do with the system, or what are they doing for the system? are the directions to think about the use cases. Okay, so when it comes to at the end of use cases, you can check your use case diagram by doing what? Okay, think with the list use cases that on your use case diagram, would it accomplish the system goal, what you're planning out to do? Okay, are all the use cases there in order for the system that you plan to work? So that's how, in the end, you're going to be marked, right? So you said, my objective is this, right? I want to be able to have an inventory checking system, and then I'm gonna take a look at the use cases, right? To see if there's enough use cases there to get this job done, right? Okay. All right. So let me show you what Visio looks like. So. It's not required to use Visio, but the Visio is very easy to use if you want to draw. Okay, so okay, let me see my Visio over here. Okay, so that's the Visio drawing program. So what you can do, you see, you go the shapes. There are several shapes you can do, right? So like, for example, I have some favorite shapes, and you can have like users. You just need to drag. Oh, this is a user here. This is a user here. Oh, you may want a different kind of users. Okay, I'll draw a security guy here, and then you can drag a big box, right? And fill this box, let's say wide, and draw the shapes, the rectangle. Let's say this is check order status, right? Just type in there, and then it's very easy to connect them. Just drag this line over here, and then you can type this. Okay, give this. Okay, this is the accountant, right? And then you can drag over this over here. Okay, you can make the line a straight line if you want. Right. So that's Visio. It's very easy to quickly draw and annotate the things that you're drawing. Right, like this. It's very easy. Just drag the stuff over here, and then double click to type. Right. Okay. Ship order. Right. And then use the connector tool to connect. Okay. It's very easy to use. Okay. It's much easier than drawing on Microsoft Word. It's Microsoft Word is very hard to draw. Don't do that. It's too hard to draw. Use some program like Visio. I think you guys can, as a San Francisco State University student, you get a Visio, right? From the school. Do you guys get Microsoft Office from school? Yeah, and I think Visio is included. Even if it's not, you can just get a trial. It's good for a month, right? You can use Visio to draw all other diagrams in this class. All right, so let me put you guys into your group, right? And let's start to work out the group project. You see over here, assign the break room. Any 8 Hello. Okay. So one of the team member went away. That I think it's Xiaoling, right? Did he or she tell you that she's not going to participate? Right. Make sure contact her, right? Because this is not supposed to happen, right? All right. So, and right. So you guys know what you're supposed to do today, right? To build that use case analysis, use case diagram, right? No, any. Just just that video is quite easy. If you are familiar with like Illustrator, Photoshop, or Corel Draw, or anything, just not hand drawn. I can't just see hand drawn things. Right. Okay. All right. Yeah. I think so because she was earlier, right? She when I took a roll call, she was here. Okay, so let me see. Xiao Liu. 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 Oh no, I think she didn't show up today. Let me check, see if we still have. Let me see. Okay, let me see here. Gateway. Yeah, it's 4 to 6. Right now, even if I move someone to your group, it's too late. That person will not catch up. But don't worry, if you have only 4 people, I will always put that into consideration that you guys are doing more work individually. Okay, let me see if she's still in my roster. Liu. I think she dropped. Is that she or him? Okay, I think she dropped. She didn't tell you guys? Oh, that's too bad. She should at least just tell you guys. No. That's the thing about my class. Some students don't like it because it's so much work. Yeah, but you learn more if you do more. All right, so okay, if you have questions, don't just ask me or pop to the main room to ask me. If I'm not there, probably with some other groups. All right. Now you can keep that part. But when she was there, she participated, right? It's still your part of your group work, right? All right, so you can keep that. Yeah, you can take off her name. All right. All right. Oh my God, my Zoom is crashing again.